right. ETF Show is here. Spencer Isreal with you. I've got a good guest today. Mario Stefanidis. He's been on our show. He was on the show, I think, a couple months ago. He's the Vice President of Equity and Thematic Research at Roundhill Investments. Roundhill just launched the first sports ETF. I guess you can call it that. Ticker MVP. We're going to talk about what's in that fund and the opportunity there. This is going to be a shorter show, only going until 3:30. Here's what I'm going to do this week as far as ETF shows. We're going to do a 3 to 3:30 show today, a 3 to 3:30 show on Thursday. Tomorrow, I'm going to go for a full hour, 2 to 3. I'm going to do, I'll have a guest tomorrow, and I'll tell you about that later. And I'm going to do a full quarter in review. Going to review Q1, end of Q1 recap on ETFs. What was hot? What was not? What does it tell us about the market? And I'll have a guest as well. So tomorrow will be more like the quarter in review show. Today will be more like a week in review show. I have a couple things I want to show you, and then Mario will be joining us here in a few minutes. So that being said, let's jump right in. If you never watched our show before, you're like, why the hell are they talking about ETFs? I don't understand. Well, you're going to understand right now because we like ETFs. Why? They're diversified. I'm doing this every time, guys. They're diversified. They are tax efficient. They have low fees. They're actively traded, and they're transparent. The 5 main reasons why I love ETFs, and we should all love ETFs. That being said, let's do a quick recap of the week. And let me just bring up my handy-dandy etfdb.com screener tool and take a look at our winners and losers of last week. And we can see here, again, as I always do, right? I take out the leveraged funds because that's like cheating for short-term performance. So what did we see last week? Our top gainers of the week, we see some tech, right? Momentum ETF, right? Next gen H2 ETF, transformational debt. This is the blockchain one from Amplify. Semis, uranium. There's the Futures Innovators ETF, moonshots, right? Growth tech back in favor last week. Some rotation. It's been a tough couple of months for people on the growth tech trade, but it worked last week for those who were patient enough. The trend for last week was back into growth tech, at least for the overall week, right? This isn't looking at every individual day. Obviously, not every day was good for growth tech, but overall for the week, your top performing ETFs, a lot of them were in the growth tech space. As far as your worst performing ETFs, I'll get to some questions in chat in a second. And there are a lot of new funds last week. That's why there's an NA, because these are all brand new funds. So you can look at your worst performing ETFs. We see some natural gas. Let's go to a second page, actually. We see some natural gas, a lot of oil. Energy was pretty weak last week, right? So a lot of energy, a lot of oil funds, and some MLP funds. You can see a lot of oil and energy names, commodity names, and China on here. So again, just like a high-level overview of the week. Growth tech, good. Energy, bad, at least for last week. It could change at any time, but that's what the return scorecard looked like for last week. A couple other things I wanted to get to before I go to our guest. We can look at flows. Again, I'm going to go into this more in depth tomorrow for our quarter in review. You can see a lot of flows into not into international assets, not necessarily U.S. specific, right? We see a broad-based developed markets ETF. We see a infrastructure. We see a. There's another one on here that I thought I saw. There was the Vanguard, the VEA. Thought there was one more. I saw that was global. Maybe I imagined that. Anyway, mid-cap growth. What did we just say? Right, growth was hot last week. iShares small cap ETF, infrastructure. Right, PAVE. I mentioned this on the pre-market show. What day was it? Tuesday when Biden announced his infrastructure plan. Tuesday or Wednesday. PAVE got a lot of inflows last week. A lot of this was probably trading around that infrastructure announcement event. Okay, materials, same thing. right? In Biden's infrastructure plan. Hasn't happened yet, but they announced it. And the whole sector called a bid last week. You can see right there in the XLB and the PAVE ETFs. There wasn't that much in the way of individual headlines, big ETF headlines last week. There was one, though, and the big one actually happened yesterday, and it involves crypto. Grayscale, the proprietor of the largest, or the issuer, I should say, of the largest crypto product in the US, has said definitively, yes, we are going to convert GBTC into an ETF. Whenever the SEC lets us do it, we're doing it. Okay? What does that mean? It basically opens the doors up. Right now, there are a lot of investors out there on the institutional side, on the advisor side, that are not allowed to invest in GBTC because it doesn't trade on an exchange. Trades on OTC markets. That is a direct result of the regulatory landscape right now. That landscape is changing. Grayscale is like, great, we're going to change with it. As soon as the SEC starts approving, I think there are like 5 or 6 applications right now from different issuers for a Bitcoin ETF here in the US. Once the SEC gets going, they get them through the pipeline, they approve it. Grayscale is like, yep, we're doing that too. We are going to initiate a conversion of GBTC from a trust to an ETF. Now, for the end trader, is there a big difference? Not really, right? All it means is that the premium that GBTC trades at will probably come in. It'll probably trade at less of a premium than it does now compared to Bitcoin. But it does just open the doors for more people to get involved in GBTC, more investors to get involved in GBTC. So super big news on the crypto front and also on the ETF front. You saw what happened last month when Canada launched its first Bitcoin ETF. Like the inflows were like massive on day one. The activity was massive, right? So we don't know when this is going to happen yet. I don't think Grayscale knows, but whenever the SEC gives them the thumbs up, they're like, we're doing it. We're going into an ETF. So that's going to happen. Super interesting news on the crypto and ETF front. There's one chart I wanted to show you. This is a chart from Tom Serafagis over at Bloomberg Intelligence. I try to scour Twitter for interesting ETF charts that I think show cool trends. And this is one that I thought was very interesting. So this is a bar chart. This is from Bloomberg again. As I said, Tom Serafagis over at Bloomberg Intelligence. A chart showing thematic ETFs and their year-to-date performance overall. So you can see like innovation is on the left, space is on the right. And this is the year-to-date performance of about a dozen or so like thematic ETFs and where the strength was, at least in thematic ETF land. You know, we have Mario on from Roundhill. They do thematic ETFs, and so this is just like thematic ETFs is basically like its own area, its own kind of ETF. And you can see here over the last year, blockchain, clean energy, and consumer staples and consumer discretionary and cannabis were like your 4 best performing thematic ETFs overall, right? So I thought this chart was super interesting. You've probably seen, at some point or another, you looked at a cannabis ETF or a blockchain ETF. There aren't that many of them, or an ETF like TAN for solar, and seen them blast off. This chart just shows you, okay, of the growth thematic ETF landscape, these are the sectors with the most year to date or 12-month growth. So hats off to blockchain and clean energy and cannabis on that front. All right, let me bring on my guest today, Mario Stefanidis. As I mentioned, he is the Vice President of Equity and Thematic Research at Roundhill Investments, coming off the launch of the MVP ETF. Going to bring Mario on now. Mario, how are we doing today?
Doing great. And, I'm really glad you showed that chart because I think that's a perfect segue.
Yeah.
So many times people lump thematics and say, oh, thematics are going to underperform. Thematics are looking good. It's what thematic are you talking about? There's so many different sectors now that can be targeted with thematic ETFs that you really need to get more specific when you're discussing the sector. It's like, are you talking about cannabis, tech, healthcare? These are all very diverse themes. And our fund that we just launched, MVP, which focuses on pro sports, is, really left field and can't really be lumped in with tech or healthcare or anything like that.
Pun intended, I guess. So I was actually, I've been surprised that there isn't like a sports specific ETF. There is now, obviously, but there wasn't before 2 weeks ago. Were you surprised? I mean, like there's as you can see, I mean, there's what 37 holdings in this fund. So there's a lot of like public companies out there with direct exposure to sports, and yet no ETF existed to gain broad-based exposure to the industry. Were you surprised by that?
Yeah, no, for sure. When we were thinking about our next idea, we wanted to do something that was going to be first to market, again, something innovative. And we had the idea of doing pro sports to give people small fractional ownership in the teams and the leagues that they really love. And when we were looking at the whole landscape, we were surprised. Not only were we the first ETF to explicitly target pro sports in the US, we're the first ETF to do that globally. And we did a pretty thorough analysis to make sure that we really were the first to justify that claim. There's one fund in China that invests mostly in sports media, and it's not even an ETF. So yeah, we're really the first here.
Yeah. So talk about that, the exposure, the US versus global, and give us the breakdown there. I'm going to pull up a graphic of your top 10 holdings here.
Yeah. So the fund is about 50% US, and the balance is pretty much all in Europe. So Italy, Turkey, Germany, they're all around a 10% weight due to the respective teams that they have public. So yeah, it's really another global fund, also diversified in terms of themes. We have about 50% of the fund in pro sports teams, about 20% in leagues and arenas. And then we also have media companies that target the industry. We have SPACs that explicitly mention in their filings that they're going to merge with a sports or a media company. So yeah, 100% of the fund is somehow exposed to sports, and 50% is actually in those teams.
Can you give us like a breakdown of like the types of businesses we're talking about?
Yeah, for sure. So even just looking on this top 10 right here. So MSG Sports, they own both the Knicks and the Rangers, so kind of as pure play as you can get in terms of team ownership. Formula One, that's owned by Liberty Media. That's what we consider to be a league. Formula One has a lot of teams that compete in it. Man United is another pro sports team, obviously out of the UK, one of the most successful football franchises of all time. And yeah, just going down this list, you can see WWE, we consider them to be a league, given that all the individual wrestlers have their own brand and following associated with them. And you also have merchandise as part of that offering. And then Adidas is one of the top 10 examples here of an apparel company that we have. So we've got Adidas, Nike, Puma, all in the fund. And we'll add apparel companies based on their exposure to sports.
I thought this was interesting. Obviously, in the prospectus, you have to outline all the risks associated with investing in this in any asset or any fund. And you guys made a point to note professional sports risk. And you talked about how these sports teams, their on-field performance can impact their financial results, but that really hasn't been the case, right? I mean, sports teams' valuations pretty much never go down.
No, totally. And, a lot of those risks are stuff that's kind of standard boilerplate language. But, when it comes to some of these franchises, we're really only seeing their value go up. We're only seeing the value of media rights go up. The Golden State Warriors were just valued at $5.5 billion. It's really only going one direction. As for some of these stocks, some of them are still below their high pre-pandemic. And I think this is a really good basket of names that should benefit from the reopening trade as well. So yeah, on a valuation basis, you're right. It's really trending upwards, but in terms of some of these teams' stock prices, it's still a lot lower because they don't have ticket sales yet back in full force. They don't have merchandise yet back in full force. But you're seeing reopening, especially in the U.S., Texas. The Rangers are operating at 100% capacity at their baseball stadium.
Yeah. So you mentioned SPACs briefly. There are a number of pre-deal SPACs that are targeting sports or athlete sponsors like Shaquille O'Neal or Colin Kaepernick or A-Rod or whatever. Is that all fair game for you?
Yeah, we've got about 5 SPACs in the fund, making up about 10% of the weight. And none of these SPACs explicitly have a target yet. Red Ball Acquisition Corp, RBAC, they were targeting Fenway and the Red Sox, but that deal fell through. So yeah, all of these SPACs are still pre-deal, but they've all announced in their prospectuses that they're targeting media franchises.
So what are the growth drivers here? Obviously, like we can say like sports, but there's different businesses. Sports operates in different industries. You have a company like MSG Sports, which is really like, real estate is a big part of that, right? Because it owns Madison Square Garden. And
so it's a really interesting company. There's actually 3 MSGs. There's MSGS, that is only the teams. So they also own an esports team called CLG Esports.
Okay.
And some minor league teams as well. But they're really only the Rangers and the Knicks. The real estate holdings are actually in MSGE. Which
wait, wasn't there just a merger though? The networks was that
the merger was announced, but it hasn't gone through yet.
Okay.
And the merger is going to be between MSGE and MSGN. So MSGN is the streaming company. Yeah. MSGE is the real estate, and MSGS is the actual sports.
Got it. So like, what other businesses though we're talking about, what are the growth drivers? We're talking about sports betting. We're talking about streaming rights.
Yep.
Give us an idea here of the growth drivers there.
Yeah, I think media rights is a really, really big one. So we just saw the NFL announce a new slate of media rights for football, and decade over decade, that's up over 100%. The deal. It was 50 billion back in 2009, 2010. Now the rights to host all of the football games is up to 100 billion. So we're really seeing explosive growth in media rights. You're even seeing companies like Amazon enter the fray. Amazon Prime is going to be have the exclusive rights to Thursday Night Football, which if you told someone that 5 years ago, they probably wouldn't believe you. But we're really seeing a diverse slate of companies enter this space and acquire these rights. And even companies like Disney and CBS that traditionally had the rights, they have to bid almost double what they had to do previously. There's a lot of talk about declining viewership, but I think given the way these franchise valuations are trending, given the way media rights are trending, I really think it's looking up for the entire industry.
So a company like Amazon, for example, theoretically, could they be included down the line, or what is the threshold for like being actively involved in sports to be included in the ETF?
Yeah, there's no hard and fast threshold, but with a company like Amazon, they would have to get way more entrenched, I think, in sports to be included in the fund. They have Amazon Web Services and e-commerce as their 2 biggest drivers. This sports is still a pretty small part of their equation, but they have Twitch, which is their streaming service that's also increasingly becoming part of the sports landscape. You're seeing top streamers stream NFL games with permission and have an interactive chat to go along with it. So they are trending towards there, but it's going to take a while, I think, till Amazon can really call themselves a sports company.
Yeah. So explain how the fund is structured. It's actively managed, correct?
Mm-hmm. That's right. So the fund is actively managed, not too different from subs, which I talked to you about last month. But we're going to be rebalancing the fund quarterly still, but it being active really gives us the flexibility to add names intra-quarter that we think are really relevant to sports. So, for example, you can imagine if the Yankees announce an IPO or something, we would probably scoop them up pretty quickly.
That had never occurred to me before, but I guess it's possible. That would be weird. As a Yankee fan, I don't know if I'd like that. By I would. I don't know.
Yeah, it would be weird, considering how closely held the Yankees are by by the Steinbrenners, but anything's possible.
I thought it hadn't occurred to me, but I suppose it is possible. And then a note here from chat. So for the moment, there doesn't seem to be any exposure to sports betting yet.
Yeah, I mean, that's what our fund bets is for. So, if you want to complement pro sports with sports betting, bets is a portfolio consisting entirely of companies exposed to sports betting, now with about 540 million in AUM. I think this is a pretty good complement to that fund, although, a lot smaller given that we just launched a couple weeks ago.
Yeah. I'm curious if there was like a specific sport domestically or globally that you find is like the most attractive, right now in terms of growth trajectory.
I mean, it's hard to peg it to a specific sport. I mean, we've seen franchise valuations for basketball grow massively, and U.S. basketball teams are really only watched by a domestic audience. Same thing with football, American football, that is, outside of the U.S., most Europeans probably don't even know what it is. And we're seeing these huge deals commanded. I think one thing I'm excited about is baseball. I mean, you saw MLB announce a partnership with China. I think that's a sport that has appeal in Asia as well as North America. Europe, it's still probably to be seen if baseball can take off there. But baseball is one that excites me, and one where you have a season that has 162 games. Part of the reason why some of the most valuable franchises across leagues are baseball teams is because they just have so many games. They have so many rights attached to those games, so many sponsorships, and a pretty long postseason as well.
Yeah, you mentioned China. I'd be very curious to see how that exposure grows, because right now I think only 1% of the fund has exposure to Hong Kong or China, but I would assume that's going to grow.
Yeah, so that Chinese exposure is Birmingham City, which is this Hong Kong holding company that owns the rights to Birmingham in the UK. But you're right. It would be really interesting to see if Asia takes off as a sports hub.
Yeah. All right. Was there anything else you think investors should know about MVP, or any common questions that you've been getting in conversations that you're having about the fund or the market?
Yeah, I mean, the fund is so new, but based on what we've been observing, there's been a pretty healthy rotation out of growth, as you mentioned in your panel just before. So I see MVP really as a reopening trade, but also has the potential for a core holding in a portfolio. If you think the economy is going to continue to reopen, if you think COVID isn't going to be around here forever, these teams should have really strong appetite for their games in a post-COVID world. And I think that's part of the reason why you're seeing tech kind of hit, because investors are really imagining a world where people are tired of being inside, tired of consuming technology all day, and participating in the outside world again. So if you think COVID is on its last legs, I think a fund like MVP really poses a good opportunity.
Here's one that my colleague Mitch just brought up. There has been experiments in the past of athletes experimenting with how do I phrase it? Like securitizing themselves. Spencer Dinwiddie wanted to create his own like a crypto of himself a few years ago. I vaguely remember that. Like what is the likelihood of like an athlete, I don't know, like not going public, if that's not the right way to say it, but like securitizing like an athlete or like an asset in being able to invest. There are ways you can. There are like third-party platforms that haven't quite caught on. I think where you can do this sort of thing where like you can invest in athletes or whatever. Would that ever be? Is that, I guess, how likely is that to happen do you think? And
yeah,
would that be something that could be included in MVP down the line? So
I think NFTs, for as much as they're touted, they really pose an interesting opportunity. Both these leagues and franchises, as well as their athletes, are kind of individual commodities that have the ability to be traded. And you saw Juventus kind of do that last year. They were probably one of the first teams to explore NFTs. Now this year, there's kind of been an explosion. But yeah, you're right. You can see these individual players traded without these leagues necessarily having to go to a third party, so they can retain a lot of the economics for themselves. NBA Top Shot, for example, that's really taken off, and I think that's almost a model for what we might see for baseball and soccer down the line.
So I asked this last question with extreme caution, but is MVP does MVP have the potential to be an NFT play down the line?
Yeah, I mean, I think some of the names in MVP, I almost said NFT.
Yeah,
that would be an interesting ticker.
Yeah,
but I think some of the names in MVP, especially the pro sports teams, are going to start adopting NFTs as part of their merchandising efforts.
Yeah.
I mean, people love the ability to have something that's one of a kind, unlike traditional merchandise. So yeah, I think, I don't know if the whole fund is going to be a play on NFTs, but I think you're going to see a lot more of it within the constituents of the product.
All right, Mario Stefanidis, as I mentioned, as is up on the screen right now, Roundhill Investments, he's our Vice President for Equity and Thematic Research. MVP is the first, as far as I can tell, and only sports-specific ETF in the U.S. Mario, thanks a lot.
Yep, thanks so much, Spencer.
All right. That is going to be just about a wrap here. I saw a couple questions from chat that I wanted to get to. Who was it that asked that question? It was Gregory Black. I think you asked if the ETF actually owns a piece of the companies. Yes, that's how ETFs work. These are all public companies. You can go and buy them right now. Well, maybe not all of them, because I don't know if they all trade in the U.S., but for the ones that trade in the U.S., you can go and buy them right now. The whole idea here is this is just a basket. It's a way for you to own all of these at one time without having to go and actually go and buy, WWE and Manchester United and Nike and MSG and all these companies. You can just own it all at the same time. One basket, one trade to rule them all. But again, not all of these companies trade in the U.S. So that complicates things from the individual perspective. Sort of makes it makes ETFs. Makes the ETF more convenient to own that asset class in that way. All right, that is going to be a wrap. Like I said, today and Thursday are going to be a shorter